Risk. Everybody has it. Everybody wants to avoid it, especially when you're talking about investing in real estate or any type of real estate for that matter. There's always risk involved. When investing, the greater the risk, the higher the reward. The lower the risk, the more conservative the return. One way that investors and homeowners and any other type of property owners for that matter can mitigate risk or really avoid risk, of course, is getting the proper insurance coverage. And we're going to spend the next hour talking about insurance with Brent Walla. Brent is an insurance broker with Snapp Associates. He is also the current chair of the membership committee for the Southern California Rental Housing Association. And the reason I wanted to have Brent on is because Brent is clearly an expert in his field. He understands the rental owner industry, and you can tell he's very passionate about providing his clients with the right coverages of insurance. So if you ever had any questions on the different types of coverages that are available, maybe some tips on how to handle your tenants, as well as any employees that you employ, especially with property managers, this is going to be an hour. I know it's an hour on insurance. Believe it or not, I was interested for the whole hour as well. You're going to want to stick around. I'm Doug Tabor, and this is Rental Owner Insight. All right, sounds good. Brent Walla, how are you, man?
I'm doing well, Doug. Thanks for having me here today. Look at this.
It's awesome. It's awesome to have you. I've been wanting to do this for a long time. You know, I've been probably dropping this seed with you for about 6 months now, and finally we got to sit down because,
nice.
You know, your business and my business really, it coincide with each other. You know, as a broker, you know, I represent my clients, sales, and we always need to talk about risk management, and insurance is, of course, the number one way for an owner to manage their risk. I mean, even as much as, you know, getting a new rider in a policy as we close that escrow, 5-year loss letters is something that we always require. So I really thought it would be a good opportunity for us to sit down and Rental Owner Insight, and for you to really just kind of break down the entire process that a rental owner would need for insurance.
Sure. So I think, you know, as we look at that process, and, you know, depending on, you know, through the process, as it come through that channel that you're involved in, right? Somebody that wants to purchase a property and what they need to consider on that. So as you guys look through that, and, you know, the reports, et cetera, and if you decide to do that, okay, we're gonna purchase this asset, we're gonna make this investment, how do we best protect it? So I think there's actually a few ways that we can go about kind of those best practices, right? And, you know, there's different ways to mitigate risk. And, you know, you can avoid risk, you can transfer risk as well. So, and then you can do things to prevent risk, right? So through the combination of those, you know, what businesses are you going to get involved in, and what are the risks associated with that? So I think insurance is a great way to transfer risk, right? And understanding, hey, what as a property owner, what risks am I looking at, right? What am I potentially coming in at? So with that, I thought maybe we can go over coverages that property owners, and then, you know, even property management, some might be management owners, managers on that, you know, what coverages should they be considering? And then kind of like dive a little into those and talk about some of the, you know, the top line on that. And then I think as it relates specifically to property owners, there's a few policies and a few coverages inside there that I think these are things you definitely want to be aware of. Because when I look at property policies, I look and go through, and there's deficiencies that I see, and I say, you know, I bring that out. It's like, hey, I've got a policy in place, and as we look through that, you know, certain things stick out to me that I'm aware, you know, as I write coverage for this particular industry that I look for, and I try to make sure that the clients are taken care of as well. So
perfect. So I guess that we could start off with what coverages and what do the coverages mean that property owners, rental owners should be considering?
So obviously you purchase the property and you want to protect the property, right? But as a landlord, you have a lesser's risk, right? You have a risk for operating as a landlord. And so, you know, the first and basic insurance policy for all businesses is general liability, right?
General liability.
So general liability, and general liability covers property damage to others and bodily injury to others as well. So, and not only does it protect you from your liability on that, so somebody would even come into your office here today, Doug, and say they were coming through and there was some water on the floor and they slipped and fell. That would be an exposure that you would have as a business owner, right? And somebody got hurt on your premises. So therefore, depending on the magnitude of that, whether that would just be a medical claim, or would they come back and seek, a judgment against, or suit against you, and then look for, some compensation on that. So all businesses have it. And so as a rental owner, if somebody's in your property and for some reason they were to be injured, right? And it was deemed that was your liability, you'd have this coverage in place on that, right? So if they were in your property, and again, could be the renter, could be one of the members of the family, could be somebody that came over and they were walking down the stairs and they slipped and the handrail ripped out of the wall because it wasn't properly secured. It was only put into drywall, wasn't put into studs.
Right.
These are the weird things that can happen. So now they fell down and all of a sudden they have a neck injury. Now we've got an issue on there, right? So that's a liability of bodily injury as a landlord, as an example, right? I always like to try to walk through these and try to give some kind of examples or case history or story so we can understand it. Because, quite frankly, people ask me what I do and I'm like, I'm a translator, and they're like, what languages do you speak? Insuranceese, because it's its own language. It's confusing. And nobody enjoys policy, and the language it's tough. So I try to translate insurance into everyday speak for my clients. And so I'll try to do that as we walk through today.
That's perfect, because I don't speak insurance-ese, so that's going to be really helpful. Okay, so general liability. Someone's over, they're visiting me, I'm a tenant, and just like in your example, they're walking down the short steps and the railing pulls out of the wall. Under most policies, is the owner covered for that, or is the insurance company going to go and try to figure out, was that hand railing properly secured? Is there an issue there? I mean, how does that generally play out? Because that's a obvious question.
Yeah,
right?
so it's going to respond towards that bodily injury claim on there, and that's what the coverage is there for. But insurance companies will go in and they'll investigate claims, right?
Okay.
And if it was deemed that, hey, was this installed originally by the builder? Did you have a contractor recently repair this? Who did the work? And so through investigation, there might be a way to say, Doug, it's your property. So-and-so got hurt on your property. We're going to pay out that medical claim. But in the investigation, we're going to find out who's really, truly has the liability here. And therefore, insurance companies, if it's deemed that, hey, I hired this contractor to come in and install all this new woodwork, and his guys missed the studs, so that was kind of that becomes their liability, right? So kind of going down a little bit of a rabbit hole, but you can see how you can transfer, and it's like, okay, we're going to go back and we're going to look into that. So your insurance company would pay out the claim, but then they might go and subrogate against the contractor's insurance, right? So everybody there's waiver of subrogation, and that's a term usually I don't understand that. I have no idea what that means. And so when insurance companies subrogate against other parties, they've already paid out on that claim, and they're going to look to subrogate so that they can now recover some of that out-of-pocket costs per se, right?
Right.
So when people sign waivers of subrogation, they basically say that they're giving up the opportunity for their carrier to go after other opportunities, or in certain contracts, people are required to that. So it's an additional line of coverage. So that's why there's usually associated premium with that too.
Got it. I didn't mean to go down a rabbit trail,
Yeah.
but that would be like an obvious question.
Yeah. No, I mean, I'm just diving a little into that.
I guess the idea to take out of that is, when you're hiring your handyman or when you're hiring a contractor to do work that's going to be a safety kind of item like a hand railing, make sure they're licensed and insured. Because if they're not, then that subrogation doesn't matter. They're going to subrogate it right back onto you, and you're going to.
Well, they're not going to have the ability of that.
Right.
And I think that's a great point. Is that when hiring subcontractors, we want to make sure we're using licensed contractors, right? licensed contractors, and getting copies of their insurance. So we ask for certificates of insurance, which is basically a proof of coverage. It shows it's a one-page paper, and it shows the coverages that any company will be carrying and have in place. So we'd want to see that. And in particular, too, we want to make sure that they have those coverages, but also that can come into, if you're more maybe in the side of property management. So unlicensed contractors that don't carry, have a license or comp, could come back and have a negative effect on your workers' comp too. And we can talk a little bit about that.
Got it.
Down the road.
So that's general liability,
Yeah.
and that is comprised of two types.
Yeah, so it's covering you for bodily injury and property damage.
Okay.
And I think one thing that I also like to note about general liability is not only does it pay out on judgment, but it also defends you. So if somebody is just file a suit against you, you can turn that into your agent. He's going to go back to the carrier and start to tender a claim on your behalf, right? So what if that's a false accusation, or it's not exactly correct, it's not exactly, we're being sued for this, but the reality is not quite. So general liability also defends you, as well as pay out penalties or judgments on your behalf too.
So explain, it defends you. You mean they'll pay for the attorneys to defend you in court, or what does that consist of?
Yeah, so they actually some carriers have legal counsel in-house, other ones work with law firms that represent them. So to go in and start to work through the process, there's a claims and investigation, and then if it goes to trial or there's agreements that are in place between parties, they'll start to break down those agreements and go back to who is responsible for what, who truly has liability in the matter. And sometimes that's done by in-house counsel or outside house. So, but if it did go to trial, then there would be defense as part of that coverage there. So the carrier would provide that defense.
Now, you primarily work in business insurance, right? So when
Correct.
we're talking about a rental property, an owner,
Mm-hmm.
that's generally business insurance. Does this type of liability also transfer over into just the residential owner-occupied type owner insurance that we carry with our homeowners
just a
insurance?
single-family
Yeah,
house
homeowner
owner
policy.
person.
Yeah.
So yes, it does, because it's written a little differently. But if I was to get a homeowner's policy for the house that I own, I'm going to insure it for the value of that real property, so the structure, right? And then I'm going to have, excuse me, I'm going to have a liability limit included in that as well. So that liability limit is going to protect me if somebody gets hurt on my property, or if we had a dog and the dog bit somebody and they were to sue the homeowner, things of that nature, and can kind of go out. So there's a liability coverage included in the homeowner's policy, but because it's for homes, the market and what we discuss is more of the homeowner's policy. So but you got that in there, and a lot of people will take and throw an umbrella over their homeowner's policy and auto policy to increase their liability up to $1 million as a homeowner, because maybe we have teenage drivers, right? Maybe we have a pool now. So additional risk where people could come over and potentially get hurt. So it's a very inexpensive way to greatly increase your liability limit as a homeowner. So,
with regards to liability limits, typically the type of policies that you're providing, is it a sliding scale for a rental property owner, like based on what number of units, size of building, value, what they're limited to as far as their liability?
Yeah, I think as liability in commercial, it always starts out as $1 million per occurrence, $2 million aggregate. So we all see that. We see those limits a lot. And per occurrence means there's $1 million of coverage for each claim. But the policy limit over the course of the term, which is 12 months on a commercial policy, is $2 million. So the limit's always the limit. So with a $1 million, $2 million general liability policy, It means we'll pay up to $1 million per claim, but the maximum that policy is going to pay over a 12-month period is $2 million. So that's why companies that might have multiple locations or larger operations will look to put an umbrella over their policies so that they can maybe they're going to increase their general liability limit to $5 million. So you'll see that at certain times on that as well.
So you can get a commercial umbrella policy added to your current policy.
Correct.
Got it.
And that can go over several lines. It can go over your general liability. It can go over your auto liability, and it can also go, if you have employees, over the second part of workers' comp is employer's liability. So depending if you schedule that underneath there. So depending on your operations and the amount of business you do, that could make a lot of sense.
So bodily injury, someone falls, gets hurt, any type of issue, they go to the hospital, ambulance ride, all of that expensive stuff, that falls under the liability section as far as up to $1 million?
That's correct.
Okay.
So there's another limit inside of general liability that's called medical expenses.
Okay.
And there's usually a $5,000 limit on there. And that's kind of a no contest limit. So similar to my example of somebody came in the office, they slipped on some water on the floor, they fell down and maybe they broke their wrist, right? So they had to go to the ER, get some x-rays, put a cast on, it ended up costing them a total of, let's say, $2,000. Mm-hmm. They could say, hey, I don't want to sue you, but I'm out $2,000 due to your negligence, or, I would like to, have you guys cover that. You could turn that in under your medical limit, which is usually $5,000, and the insurance companies will generally just write that check for you. So it's a non-contest kind of lower limit, just takes care of it, keeps things from escalating.
Sure. However,
yeah,
if they do decide to go after you, it falls under the standard liability limits.
That's correct.
Which would be $1 million to $2 million aggregate for the 12 months. It's interesting that you said 12 months because automatically when you said $2 million aggregate, I just thought over the term, but I guess I wasn't really thinking that an insurance term is generally 12 months long. Is that correct?
Yeah, it's usually written on most commercial policies are on a 12-month annual policy.
Okay.
Yeah.
That renews every 12 months, and if there was a big old $2 million claim, I'm assuming that premium would go up significantly.
Well, losses are going to have a direct effect on your premium, right? Mm-hmm. And that's where you mentioned earlier when you're looking at purchasing, we want to get a 5-year loss history. So what has the property experienced, as claims or losses in the past? And that would come back, and during your renewal or your quoting, they're going to go back and they're going to factor those in and look at, what type of claims were they, how were they settled out, what adjustments have we made, post that to make improvements on there, and that's something we're going to want to talk a little bit about later on. I think is maintenance, and maintenance is a huge way to mitigate risk.
Yeah, I'm also, I want to talk with you about past claims, but I don't think we're there yet. I think we're still talking about coverages. So
yep.
General liability, does that
I think
pretty much sum up liability?
I think we got there.
So what's the next section?
So we'll talk about property insurance.
Property
right?
insurance.
Obviously,
okay.
Everybody's probably really concerned with property, and I think let's define property in the sense and from the insurance world, right? There's real property, and then there's personal property. Real property is the structure. It's the walls. It's the things that are bolted down. So if you pick the house up or you pick the condo up and you shook it and whatever fell out on the ground, that would be contents or personal property. The walls, the roof, the water heater that's bolted in, those are going to be items that are considered part of the real property there. The cabinetry, things of that nature. So we look at that. It's going to protect the building and the structures that are on the property in there. So, the elements that are permanently attached, like we talked about, and then some of the exterior items we can look at too, depending on what the property looks like. Do we want to look at the fences? Do we want to look at the garage port coverings? Are there any additional buildings outside of the primary buildings? So some things to consider. Even like we put in a lot of landscaping and wanted to, if that was damaged in some way, would we have limit to replace that? Because, it's part of the property on there as well. So you can look at those. So that's the physical property. This table in the business insurance on the property policy, this would be contents, personal property. So
Right.
you come up with a different value of that. And I think people on homeowners you're gonna look at what you have in there. There's certain items that you're gonna want to schedule because they're high value, they're very unique, and you want to make sure they have specialized coverage for it. But I think with property, we're going to insure the building, right? We
Right.
bought an apartment building or we bought a duplex, something of that nature. We're going to want to cover that. And I think there's 3 forms that property is written on. And the forms cover what you might see or hear somebody say in the insurance world as a peril, right? And a peril is the cause of loss, right? So what caused the loss? Was it fire? Was it a windstorm? Was it, hail? Something of that nature that damaged the property. And so you have basic, broad, and special. I always recommend special. I always write special whenever we can because it's the most comprehensive. It's the broadest. So basic is very basic. It covers fire, windstorm, and smoke damage. Next, you got broad, and in addition to what basic has, it also includes falling objects, collapse due to ice, sleet, or snow, and then water damage on there.
On broad.
On broad, yes. You get those causes of loss or perils. And then special is the most comprehensive, like I said, and it includes everything except what's excluded, right? So if it doesn't say that it's excluded in the policy, it'll come in and trigger coverage for you. So I think you want special, and when you own a property and you get that policy, that would be the exclusions would be a good place to have your agent or spend some time walking through and understand in the property form what is actually excluded and not listed on there.
Yeah, that's pretty important because we know you're a really solid, reputable agent here in town, but as in any business, there are a few bad apples that spoil the bunch. So what you're recommending if someone's looking at a new policy, make sure that they're considering basic, broad, or special, and special being the most comprehensive, because someone may be putting a basic policy in front of you and you may not be insured for, water. I mean, water probably is the most common form of damage we see in the business.
Yeah.
Water was really hard on buildings. In fact, I just closed a 4-unit building and they had a flood about 2 years ago, and that did come up on the 5-year loss run. I was going to talk about that a little bit later when we talk about past claims. But quick question, does the special include an earthquake? We are in California, hurricanes and typhoons. We're looking out the window, this beautiful Southern California afternoon. Does it include earthquake, which is one of our more common?
Right, great question.
issues?
Earthquake is not included in property.
Okay.
Earthquake is its own policy,
Okay.
as is flood. So, or you can get a policy that can be a combo of both of those that would provide both of those coverage. So you can write earthquake on its own. You can write flood as its own line of coverage, or you can write a combo of earthquake and flood. So those are not included in the standard property forms.
Question. Okay, you're saying flood. So are there 2 types of flood? Because water damage from the internal flood, a water heater breaking, you flood the inside of the unit, or water damage from the levee breaks and the river's overflowing. Are those 2 separate items where broad would cover one and not the other?
So flood is going to be coverage from an exterior source that came out from outside the property, and there was water that came into that.
Right.
So what you're talking about is water damage, which usually comes from a sewer backup or overflow. That's what we see on those, right?
Right.
On there. So the water damage that comes in, depending on how and where the accident occurred and how the flood occurred, could be covered in there. And that those are the water damage and the sewer backup and the overflow are points of your coverage that you want to be aware of, to understand.
Sure.
Because, as you said, it's one of the most common losses and it's one of the most damaging, that creep. And if they're not found at the time of, when the accident occurred, or it's a slow leak process on there, that leads to, mold. And
Sure.
then you've got a bigger, tear down, clean out, and
Remediation.
yes, that whole process in there as well. So that's a very important area to look at when it comes to property coverage.
So property coverage, real property. Did you
Yep.
kind of cover that so far?
Yeah, I think the other part of that, not so much specific, like you said, we talked about content. So again, that's a little bit more for the person living in there, et cetera. But I think property on the broad spec, we talked about it. Some things that I would like to touch base with about property that I think are very applicable to the clientele here is that, first and foremost, I want to talk about replacement cost, right? So replacement cost is the limit that you set for the actual dwelling or building, right? So it's a limit of coverage, and it's not tied to the market value of the building or the property. The limit is basically what would be sufficient to rebuild this property from the ground up in the event of a total loss. So let's say there was a fire, it burnt down to the ground. What are we going to need to have in place to rebuild this property of the same, like kind and quality of materials, right? And so we're just worried about the contents. We're worried about the materials to rebuild. We're not talking about the value of the land. We're not talking about the sale value. We're talking about the replacement value.
The total replacement cost. And is it
replacement
usually
cost.
at a percentage above 100, or is it just total cost, or how is that explained? Because I've
So-
seen it both ways on policies.
So how we go about factoring in replacement costs is that you take the square footage of the property, and then you take that with the value, and you come up with a per square foot replacement cost. So you try to determine what the replacement value is, and then you can divide it that way. Or we would say that you want to go San Diego, typically 150, 175 wood frame construction for a property. So take, let's just err on the higher side, 175 square feet times the amount of square footage we have in place, and then that would give us our replacement cost there. So what could have an impact on figuring out, is 150 really enough for this property? What are the updates like, right? When's the last time, the units were remodeled? Did we put in, higher quality cabinets and countertops and things of that nature? So what kind of upgrades have been done to the property, and do we need to factor that in to the square footage cost?
Yeah, because I'm not selling anything at $175 a square foot right now.
For sale value.
Yeah.
Sale value.
For
So
sale
again,
value.
and again,
We're
not
focused on
sale
the
value,
replacement value.
not the value of the land,
Okay,
the value to rebuild the property
right.
with the same like kind quality materials. So it's really a materials and labor
Got it.
on there.
Is that a sliding scale based on the economy at the time? I mean, right now we have labor shortages. I guess the question is, do insurance companies evaluate that, or do they come up with that number at the time of insurance is needed, or how does that number come up?
When they're going to write a policy, there's a couple tools and systems we can use to go in and come up with value, kind of those values to determine that. The carriers are also going to have their tools and come in and look at it. And then they might say we want to do an inspection, take a look around so we can fine tune that, either pre or post coverage to make some adjustments to make sure what was reported was accurate, or before we actually will quote it, we'll want to see the property to make sure that that's taken care of and covered on there.
Got it. Okay, so property replacement costs. Got it.
So, and I think the reason why we want to know this, right, is one, we want to have enough limit in place, because the limit is the limit. So some people think, let's say I have a $100,000 limit, just basic numbers. but my property to rebuild it's going to cost me $150,000, right? So you only purchased 100. So in a case of a total loss there, they're going to give you that 100. So that additional dollars, you only get what you purchase. So limits are the limits. So there's sometimes this misunderstanding that, oh, I have insurance, it'll be covered, right? A, is the coverage in place? Is the coverage excluded or not? And then what is my limit on that too? So having a little bit more understanding on that. So I like to review square footage costs on an annual basis with my clients, or when I go in, I look and ask, let's see what your limits are. Let's do some square footage calculations, and then talk about whether you're purchasing it or the seller. What have they done to this since it's last been evaluated? So that's just a good practice is to really review your square footage replacement costs every time you go to renew your insurance policy. Good
practice, especially if you're trying to cut expenses and insurance is one of the easy ones to just cut. That makes a lot of sense that there is a limit there. Yeah, and we went back to the coverage forms. If you currently are on a broad form and you go and get a different quote from another company and they quoted a basic, again, you're not getting that apples to apples piece there. So you want to make sure you understand where you are, and you can work with your broker, your agent, to kind of walk through those and make sure you're getting and you understand what coverage has been put in place. Where do you get the square footage at? So a lot of, depending on resources online, they'll have the building information online, right, or things that, so we usually go to online and look at that, or then I'll work with the property owner to see what documents they have on that. But most of the properties have an online listing through county
some of
records or something.
Yeah, through some of those, and there's some other property websites that we can use that list information on properties, and we just verify those as well.
Got it.
So I think one thing also as it relates to the property policy is there's a clause in there. It's a co-insurance clause. So it's important to know because co-insurance is put in place by the carriers to make sure that you're carrying enough of a limit to cover the property. So if the property's replacement cost is $1 million and you're only carrying $500,000, you're only carrying 50% to value, right? So you want to know, do I have a co-insurance penalty in place on my property, right? Or on my property coverage, I should say. So do I have a co-insurance clause would be a better way to see it. So is there a co-insurance clause on my property policy? And if so, what is it? And you would see it at 100% the value, 90% the value, or 80% the value. So that says, per that agreement with that insurance carrier, that you are insuring this property to 80, if it's an 80% co-insurance, to 80% of the value or the replacement cost. So in my scenario, if the property was worth, it had $1 million replacement cost, and we insured it for $500,000, so we only insured it by 50%, right? So what would happen during that is there's going to be a formula where by underinsuring it, that 30%, there's going to be a penalty of that 30%. So if the claim was going to be X amount of dollars, the carrier would say, well, you've underinsured it by 30%. We're going to take a 30% off that minus your deductible, and then you'd end up with that amount of settlement there. So could be substantial if you're underinsured or you're carrying a co-insurance on there. You can work to also try to remove co-insurance on properties, but you have to come up with an agreed value with your carrier. So there's some ways to look at it, and you can have that conversation more with your agent. But I think most importantly, you want to make sure you understand, do I have co-insurance, and what is the percentage, and then what is my replacement value based on the calculations, and am I insuring it enough to cover that co-insurance clause? Okay, just to clarify, so co-insurance is a lot, right? I got a little lost there, but we're talking insurance here. Yes, exactly. So I'll try to simplify it too. Okay, so co-insurance is a good thing. It's essentially co-insurance if you have $1 million loss and you've only insured it up to $500,000 limit.
if you had co-insurance in place, which I'm assuming is an add-on, right? Is it
No,
an add-on
co-insurance is actually a requirement that's put in place by the carrier, right?
It is a requirement.
It's a requirement. So they're
Okay.
going to say on this policy form, we're requiring an 80% co-insurance.
Okay.
So 80% the value. So if you're not carrying enough, so if you're basically stating, hey, my property is only worth it's only going to take $500,000. So if I'm trying to save money on my premium,
Right.
and I'm skirting my values and I'm making adjustments on there, and actually it's going to take $1 million to do that. The carrier's saying, hey, per the contract, because that's what an insurance policy is a contract between the carrier and the holder. They're saying that you have agreed that you are going to insure this property up to 80% of its value. So co-insurance, I wouldn't say it's a positive thing, but you got to understand it's part of the policy. So what you want to be aware of is, what is my square footage, replacement cost? And I want to make sure that I'm carrying enough limit on the property limit to cover that.
So the point of all of that is the fact that make sure your limits at the right amount, period.
Be aware of your replacement costs.
Be aware of your replacement costs.
And then make sure you're carrying enough limit
To
rebuild the property. And then if you have a co-insurance, make sure you're carrying enough to meet that co-insurance.
So the
cost.
Co-insurance essentially insures the insurance provider. Is it kind of like mortgage
it's a
insurance?
guarantee. It's a guarantee. It's to benefit the carrier that
Right.
you are going to be purchasing enough insurance. It prevents people from underinsuring their properties.
Okay, got it. Okay.
So it's a little complicated, but I think most, just be aware if you have that, and like you said, go back that replacement cost on there.
Well, that's why they
Hopefully
hire,
we didn't confuse everybody.
That's why they hire experts. If you're confused, we have someone for you to call, and he'll explain it all to you. Perfect.
Certainly. Now, I think one other line or area I wanted to talk a little bit more about inside is business income for the property owners. So what is business income or extra? Business income and extra expenses is what you might see on your policy. And that business income is going to cover for loss of rents. If you have a claim that's covered and you're unable to rent the property out. So in a case of a fire or smoke damage, and you need to go in and bring in restoration and get that rebuilt, or if it's even on a bigger level. So now you have tear down, you have debris removal, and you have to draw up new plans. You've got to obtain permits. You've got to hire a general contractor, and then weather might factor in. Not as much here in beautiful San Diego, but
Right.
We get some rain every now and then, things of that nature that might have. But other parts of the country, the snow, change of the season, rain for days, things of that nature, could all have a factor on delaying construction on there. So I think what's important is you want to make sure that you have that business income insurance in place. And things to look for on a standard policy, you'll see 12 months of coverage for that. And some people might say, hey, that's great. I've covered if I'm not able to offer or get my property back to shape where I can rent it on there, I'll have rent coming in, which is a great thing. But when you factor in, the things we talked about, and on top of settling the claim too, we could easily be looking at 18 months, depending on the size of it, or longer on there. So I always recommend 24 months on the business income. You can extend that out even farther if need be, but I think best rule of thumb is 24 months on that.
24 months. It's funny that you mentioned that, because immediately what sprung to mind when you said some people think 12 months is long enough, I was thinking those people have never been through a claim process and a rebuilding process.
Right.
Trying to even get contractors engaged can take 90, 120 days.
Yeah.
So 24 months is a good solid amount. 12 months can go by in a snap.
Sure. And depending on what caused the loss, was it just your property, or is it the area has been hit by a disaster? And so that's going to factor into supply, demand, materials, delays, labor, like you mentioned earlier in there. So yeah, I think that 12 months, clearly not enough. 24, great. We can look at 36, 48 even on those as well, depending on location, etc. on that
Sure.
too. So,
Fortunately,
but that's going to keep people whole. I mean, maybe I'm a first-time buyer and I bought a place and I've got the mortgage on there. I still got to make those mortgage payments while I'm rebuilding it, right? I still owe that money. So that business income is going to allow me to recoup those lost rents and keep things moving forward.
do they generally cover 100% of what's listed on the rental agreement?
So you're going to go through a schedule and you're going to schedule out, and then they're going to look at histories on there. So it's going to be a little bit more of a dive on what's actual. So we're going to, for claiming X, they're not going to pay you Y because the history says this is the income from the property.
Right.
So they're not going to pay you more than that, but they're going to make you whole on that.
Okay.
That's generally how it works.
Keep good records.
Yes.
Keep good records. Okay, question. I don't know if this would be under business income. There's a fire, 4 units, 4 families are displaced. There's a cost to displace those families. Who covers that cost? Or what part of the insurance policy would help you cover the cost of putting up the displaced families in another location if you don't have units?
It's a great question. So really, that's going to come down to the displacement, or that's really going to be dictated on kind of the law of that area. So as we've been talking about, and not talking about, but we've been in the midst of rent control, right? And those areas that are subject to rent control are going to have some language that is law that could come back on the owner, right? Depending on what that law is. Mm-hmm. So insurance isn't really, they're going to go in and depending on the loss, they're going to go back and start working on the replacement of the property and getting it back to there. But the renter that comes in, and this can kind of go a couple ways too. Let's just use fire because it's a common example we've been talking about. Was it faulty wiring in the wall that caused the accident and therefore it's on the landlord and on the landlord's policy? Or were they using the stove and they forgot they put a box in there from Amazon to hide a gift and they turned it on and it caused a kitchen fire, right? So depending on that too, it's going to come in to factors. So if you're in an area that's governed under rent control and it says that you're required to provide housing at this rate for these people, then that could trigger into a business income extra expense loss. But it typically, you don't have coverage in there. It's very rare, but some areas are governed by that law and the carriers will come back into that. And I've talked to claims adjusters and underwriters about that. And so the initial response the displacement really wouldn't be covered, or the carrier's not looking to cover that unless governed by law, which kind of goes into the reason we want our renters to have renters insurance.
I was going to say,
right?
This probably dovetails right into renters insurance.
Yeah.
Especially if they're barbecuing.
Yeah, yes, and there's a lot of things with barbecues and balconies and things we want people to do and we don't want them to do, and best practices that'll come in there as well. And I think, renters insurance, we want to make sure our tenants are carrying that. We want to make sure they're carrying it because we want their stuff to be covered in case of a loss, right? So their contents and their property. So that's a good thing. As an owner, we want to make sure they have this coverage in place in case they do damage to our property, right? So if it's the oven fire they started in the house, we want to get that claim settled. But again, do we want to take the bearing of that claim? Even if our company comes in, our carrier comes in and says, hey, we're going to handle the claim, they're still going to want to go and subrogate that loss against the renter on there.
They're going to pursue them.
Yeah, they pursue that. And
Yes.
so what the renters don't understand
Right.
a lot, they're like, well, yeah, I'll get renter's insurance and I own some stuff, or I really don't have, my stuff's not that valuable. So if I lose it, it's not that big of a deal. But that goes back to your question from earlier saying, as a homeowner, do I have liability exposure? Yes, you have liability exposure. When you do damage to other people's property, that would be in your liability section of your homeowner's policy. As a renter, if I come in and burn down your unit or your home, I'm going to be liable for that. So if I don't have some coverage in place for my liability, I'm personally on the hook for that. So we've seen, stories or, case histories where somebody has come in and actually started a fire in a hotel and burned up a hotel. And that person, went through the claim and the suit, and that person is personally going to be making payments for a long time back to that owner. And so those are bizarre, crazy stories, right? But I usually say insurance isn't for the bumps and bruises. Yeah, we want to make sure that we have a good level on our sewer backup and water overflow, because those are the easy, quick, like personal disasters, right? But on the bigger things where you're like, heaven forbid, or you have those moments where you're like, that's where we want that liability coverage to come in place. So renters that push back, I mean, good property owners, good property management companies are going to say, we want you to have that. We want you to have that so you're taken care of, and you can respond if things happen and you're whole. And then two, I want to make sure that if you do damage to my property, you got coverage in place on that as well.
Yeah. So can a carrier maybe give an owner, say, a discount or something if they require renter's insurance? Have you heard of anything like that? I mean, are there any type of incentives for owners to carry, other than the fact that they're gonna?
I mean, it can be a requirement, but you could, depending on how you want to do your business, hey, if you carry renter's insurance, I'm going to give you a percentage break on rent per month, just as a good practice or an incentive, right?
Sure.
So wouldn't necessarily be bad, but depending on where your property is, what type of properties you have, what your clientele's like, I think you want to factor that all in. But I have property management companies that is just a requirement. Credit, renter's insurance. So
Makes sense.
It's going to be a personal preference, but I think also good owners, good property managers, they're going to explain that. I'm not just doing this for my benefit.
Right.
If you're unaware, let me tell you why you want this. And then when people have that understanding, again, insurance is so misunderstood. A lot of people look at it like, God, I really hate having to have this, and this is the only reason, because I want to do this piece of work or this contract, or just because I'm going to live in your house, you're going to make me go buy this, but they don't realize what they're really buying, right? So once you have an understanding, people kind of sit back and they like, the thought. And you're like, well, yeah, I understand why I need this now.
It's peace of mind. It allows you to sleep at night.
Yeah,
I
for
love
sure.
being insured.
And ignorance is bliss, right? So when you aren't aware, but when you start to, but
Scary.
when you start to aware of really how you're involved, it becomes a little daunting sometimes.
That's right. So what other coverages did we have? Is that everything as far as coverages?
So I think,
you really want to go over?
as it relates maybe a little bit more towards the owners that have property management too. Mm-hmm. Like, so we know some owners that are they own their own units, or there's some owners that own their own units and they get a little bit in the property management, right? Mm-hmm. And that might take them into, I have 2 or 3 people that work for me, right? So I think for property managers, hired and non-owned auto, they might say, Brent, well, I don't own any, my company doesn't own any automobiles. Doesn't mean you don't have an exposure with an auto liability. Because hired, meaning rented vehicles, or non-owned, means vehicles that you don't own, the companies can still be associated with the liability on that. Let's say I have an office manager, somebody that runs my office, and I'm inviting in a client, and I say, hey, you know what? I really like to get some lunch for us. Would you mind putting in an order and bringing me back some lunch for 6 people today? Sure, that's fine. And during the course of it, you're driving down there, and we know you'd never do this, but you forgot exactly, was it 5 or 6? Or was somebody a vegetarian? So you send a quick text, and all of a sudden you look up and you hit somebody in a crosswalk. Oh. That would be bad, right? That would be bad. And we hope that would never happen. But if I was the office manager, my insurance would be primary, and I'd be responsible for that. But if they interviewed me and they said, hey, Brent, what were you doing? Well, I was at work, and I was out picking up some catering, and they said, oh, you were at work. So the company could be dragged into that. So even though they don't own that vehicle, there could be some associations. Now, if I deviated off that path and I wasn't actually doing that that activity or that task at the time, it might not come into play. But as a company, you have that exposure as well. So you can add hired and non-owned to your general liability,
Okay.
and have that coverage in place on there. And it's very inexpensive. So I would highly recommend it.
So hired and non-owned auto. Okay.
Yeah, which can be endorsed on the general liability. Again,
What else?
For workers' comp.
Okay,
Obviously,
yeah,
you have
yeah.
employees, we've got workers' comp. But I think in general, it's kind of basic, right?
Mm-hmm.
People understand that. But with AB 5, the new law here in California, the independent contractor is very far or few anymore that qualifies for an independent contractor.
Mm-hmm.
So maybe you need a little extra help, at a certain point in time of the year, and you want to bring somebody in to help you on there. And in the past, it was like, well, they're a realtor, or they're somebody that works in this business, whatever the scenario might be.
Right.
In the past, it's like, oh, I'll just hire you and pay you out X amount of dollars for coming in and do that. But now, the change of the laws is independent contractors don't exist here in California, right? So you need to be aware of that and then classify those people on your comp policy with the type of work that they're doing and the payroll about that. But more importantly, if you don't carry workers' comp and you bring people in to work like that, where you might have considered them, hey, they work for me 4 times a year, they're an independent contractor. And if they did get hurt in the course of working for you and you're not carrying comp, then the company's going to be personally responsible for those medical bills. But if they get hurt and they have loss of work or loss of income during that, there can be some indemnity claims on that too. So if you're hiring people, we want to make sure that A, you can take care of them if they get injured, and B, you can protect your company from being personally liable for those.
Big one in our business, workers' comp, and again, relatively inexpensive. It's not real
It's all indicates, like, if you're a small business and you have a couple employees working for you, it's going to be minimal to get into. And if you got a couple people that work in the office, it's going to be really inexpensive to get into. I mean, you could possibly get a whole year of coverage for less than one visit to the ER. So as you look at the risk reward on that, you want to protect your company. And so depending on the type of jobs, office people have a much lower premium rate than a roofer would, right? Higher risk, more exposure, potential for injury, things of that nature. So the other part about that is, so it all factors on number of employees, type of work they're doing, and then the class of business that they're in, and that's going to have a rate associated to it.
Got it.
The second, I think real quick before we maybe jump off work comp, the other part about that is hiring those subcontractors, right? So when you hire somebody to come in and work for you, this is where we want to make sure that they're a licensed contractor, okay? Hey, I've got damages, or I want to repaint the building, things of that nature. We want to make sure they're licensed. We want to make sure they're carrying their insurance coverages as well. I'm going to hire you, paint my building. Here's the contract. We're going to agree to that. I need a certificate of insurance from you, additionally insuring me. And you want to see that they have workers' comp on there too if they have employees on the job. Reason why is that if they're not licensed and they're not carrying that, during your work comp audit, so comp audits, work comp is reviewed at the end of your policy term every year. It's always going to be reviewed. It's not an IRS audit. It's not something you try to avoid because you don't have a crystal ball. Do you have a crystal ball? I don't have a crystal ball. I can't guarantee you how much work I'm going to do this year. I can't guarantee you how much I'm going to have in payroll this year. Now I have an estimate, maybe I have a pro forma, but there could be some factors from one way or another. I might pick up a big contract and things go, are great, and I need to hire up for that. Or I might, had a contract in place that company went out of business and now we've lost and we had to lay out people. So certain comps can be audited up or down, positive, you either owe money at the end or you don't. And an unlicensed contractor that did work for you one time and you paid them out on that could potentially, during your audit, hit your workers' comp. So let's say you had a modest workers' comp bill and you hired a an unlicensed contractor, and then through the audit they determined that he's not a business, he's not an entity, and he's a roofer, and he came in and worked on your building. So now we're going to apply this much of a rate and salary to your work comp policy, because if he goes and files a work comp claim against you, we're going to have to defend it. That would be the carrier's position. So that's really, I think, more where you're looking for that for the owner or the property management to make sure that they're avoiding taking on that risk of having to cover those work comps. So you might hire somebody who's inexpensive, he's half the price, but he's not licensed, he's not carrying insurance. So the risk goes up to you.
A lot of risk out there.
A lot of risk. I think maybe the last thing we should talk about too as property management is professional liability, errors and omissions on there.
Okay.
It's going to offer coverages for suits that are going to come out of providing professional services or not providing professional services along those lines, whether it be to your client's a property owner, or you're working for somebody in a contract you entered into and you failed to deliver services on their behalf. Sure. So that could come about on you as well. And then we've seen, with the changes of the, potentially there could be a discrimination suit along those lines. We've seen some of the laws changed on who you can rent to and how you can and can't rent to people along there too. So something to be considered if you're kind of in that space too. And there's more to it, but I think just something to be aware of.
So that would fall under errors and omissions?
That would be, we call it professional liability.
Professional liability.
But it is errors and omissions coverage there too.
Yeah, because I know as brokers, agents, errors and omissions is a big part of our,
right,
workers'
absolutely.
comp and errors and omissions are kind of the main coverages that we achieve. Any other coverages? We covered, pardon the pun, but we covered a lot of coverages.
We certainly did. I think for today, that's really, I think, what I wanted to cover and kind of chat with you about.
Right.
Just making people aware of those things. So they can go back, they can look at their policies, they can say, hey, do I have this in place? What form is my property coverage on, right? Do I have a co-insurance pending? And quite frankly, what is my replacement cost? And looking through. So those are some big things to know for property owners, and just kind of understanding the other ones to make sure those are in place. Is just good knowledge. It's good to be aware.
It is really good. So we really covered coverages. Let's pivot a little bit.
Okay.
Because I have some specific questions. What about those dirty, mangy old dogs? So I know there's a list out there somewhere. I've never seen the list, but I've heard about this list.
The list
of dogs. So what are some of the pointers you can give some of the owners about dogs? Which dogs should they allow? Which dogs shouldn't they allow? We won't hold you to the exhaustive list, but are there some kind of standouts on how to handle dogs?
So I think that every carrier is going to have a different tolerance. So this goes back to understanding your policy, right? And there's a lot of things that you can put in place, or you might have an exclusion on your policy that says we do not allow pets, or understand that we do allow pets up to 15 pounds. So there's going to be certain breeds that are going to be harder, or they're just not going to provide coverage for, even as a homeowner. So if you own a certain breed of dog and it was to attack somebody in the street, you might not have coverage for that. So again, knowing, does my policy exclude dogs? And if it doesn't, or does it have an exclusion on certain breeds or certain sides of that? So that's where you would want to go in. And that will vary from carrier to carrier. So that's more along the lines of, but I think as a property owner of rental property, you need to know where you stand on that, and then you need to come up with, your standards on that as well.
Certainly something to consider. Anybody who knows me knows I'm an avid dog lover. I love dogs. But there are certain dogs that I don't love because they're obvious that they are really aggressive. And I'm not really thrilled about this whole new culture of service animals. Any advice for the owner where, well, on the one hand, my insurance company excludes this type of dog, but on the other hand, if it's rated as a service animal, the tenant could kind of force that. Have you heard of any stories? And if you don't know, then don't, if you if there's no particulars, but have you heard of any stories where that's kind of, those two have collided?
No, I personally haven't seen that.
Yeah.
And I think that, we do see service dogs becoming more prevalent. And, do people have the proper documentation for those is I think would be the best bet. Understanding, because that could come into a couple areas of, hey, they didn't rent to me because I have a service dog, right? So understanding that, but I think I'm not familiar of the actual documentation, like what formalizes a true service dog, besides a guy throwing a vest on it with some patches that he bought online says
Right.
service dog, right? And it's like, yeah, my Newfoundland here as a service dog. It's like, okay, well,
Right.
that might fly, that might not.
Right. Yeah, a surface lizard now.
Yeah.
Okay, so we've gone about an hour, which I'm learning a lot, so I'm good. We may have lost some people, but this is all good information. They still may be with us.
Sure.
We can always chop this up. So
Sure.
I want to pivot to building maintenance. We touched on that a little bit, but this is important.
I think it's a great idea.
I mean, unless you're burning out, I think that we should talk about some of these other items like building maintenance, a huge one.
So I want to cover two more things if we have time for today, and I think that are extremely important. As we talked about in the beginning, there's different ways to mitigate risks, right? Building maintenance is a huge way to prevent losses.
Okay.
And, as an agent, I never want to see my clients have a loss. Carriers don't want to have a loss, and most times when you talk to individuals, they would not want to have a loss, right?
Right.
So how do we go about preventing losses? And building maintenance is a great way to do that. So as you look at that, it goes hand in hand with proper coverage, proper building maintenance on there. It's one of the key ways to reduce claims that come back in, and because wear and tear, is not a covered loss. So my air conditioner is old, and it's up there, and it's kind of smoking, but I'm just going to let it be, and it burned out. So wear and tear and things that go along those lines, that's not covered. So we want to keep the building up the property, in good shape to prevent losses, because maybe there's some wiring that caused the fire, but now instead of replacing the unit, now we've got to replace the burn down, and what is the pain that goes along with that? The tax, the pain, and through the process, because construction is construction. It's challenging, right? And you got to settle the claims on that. So that's a big part of it as well. And every time you're updating the building, maybe you're doing a repair on the roof, we want to document that. The HVAC, the heating, the electrical systems, the plumbing, all of those areas, as we do those updates, when I come to you, Doug, and say, okay, we want to talk about this property, well, what type of roof does it have on it? And when was the last time it was updated? And that sometimes puts property owners in a bit of a struggle. They're like, I need to go back and find that. I don't know if I have that, And those, if you're a property owner, you want to know about your property, especially the roof type. There's a lot of considerations in that, water leaks, fires, things of that nature. So understanding what type is on there, when it was updated last, and keeping good records, like you mentioned before, is a very, very useful thing. So we can go back and do that. Also, there's electrical panels. There's a couple bad words out there in the apartment world. Zensco is one of the older panels that are on there, and if you have that, I think there's another one that maybe I can't remember. It's Pacific something. But if you have those electrical panels currently on your property, we're gonna have a very hard time, or we're not going to be able to insure you on that. So, because they're known to cause fires. So it's an older panel that might be in place, and carriers now are going to be like, we're not going to write that coverage because until you replace those panels on there. So I've actually gone through that with one of the properties that I've dealt with in the past too. So if we see those, that's definitely a red flag. So updating, keeping things up on that.
What other red flags? Those are important to know.
Those are important to know.
For insurance.
Yes, exactly. I think another area that we always look at that might be, hey, I have an older building and the handrails on the stairs or the balcony, or say there's a second floor walkway, if the handrails are horizontal rails, those just look like great ladders to little kids. So we want to prevent, old handrails that might be, even if they're vertical, if they have large gaps where kids can stick their heads or bodies through,
Right.
climb up on surfaces on that. So those are areas that we want to look at and make sure they're going through on there.
What about the vertical, the width in between the rails? I mean, code is obviously 4 inches.
Yep. And
one of our tricks that we use is if you can fit your fist through it, it's probably bigger than 4 inches. It's just a regular man's fist. Do the inspectors go around and look at that stuff before they write the policy for the most part?
Yeah, so sometimes, I'll be asked, have you inspected the property? Have you actually been to the property? And sometimes that's physically possible and sometimes that's physically not, as I write, coverage in multi-states as well.
Right.
But if I can get out there, I always want to take a look on that. And sometimes it'll be, we can offer this coverage pending inspection on there. But that can happen, or sometimes that might be a pre-bind, or it might be a post-bind. Hey, you reported this, but actually it's this, and we need to make some adjustments. So, hey, I'm just not going to report that, or I'll just forget to mention that. Doesn't mean that it won't be discovered, and your premiums might not be adjusted on that. But hopefully, we're looking at this going, hey, this is an investment. It's part of my business, part of my livelihood. I want to take the best measures to protect not only me but other people, because I don't want to be involved in claims or other people's injury on there. So I always say, hey, it makes you sleep well at night, right?
Sure.
You got the coverage in place, provide the right coverages, helps everybody get the rest that they vitally need.
What does the insurance world think about pools, community pools?
Pools are definitely have a risk involved with them, right? And I think if you have a pool, you're probably most likely going to have an inspection, and they're going to look at a lot of factors on there. Obviously it needs to be fenced. What is the gate locking? Is there some kind of control systems? All the safety elements that go into that, and the signage and things of that. So pools are definitely a concern. Is the pool ever emptied? And if it's emptied, for how long? Is there a security guard present when it's empty? Things of that nature. We don't want empty pools at night when somebody thinks it's there, and they might have come home and didn't realize it was empty and they jumped in, right? So, pools are one of those things that are additional risks. We're going to look at the property and say, hey, what's on the property? Do you have, do you have swing sets, or those type of playground apparatuses, right? What's the flooring like? So depending on what's on the property and what's incorporated in that, all those things, factor into the risk, and we get into that. And, quite frankly, I welcome those inspections, and we call them loss control these days. And there's a big difference from where loss control was in the past to where loss control is today. And so I work with a handful of carriers that really specialize in this space, right? So I think as we become experts in these spaces, I always want to look at the type of property it is and bring in the right carrier that also understands what these properties are, what they look like, what they have in on the grounds for itself, and bring that in. And so what these carriers do is, one of the proactive services now they offer is loss control, right? So coming out and walking the property, meeting with the management company or meeting with the owner. And in the past, these were seen as negative. They were very harsh. People showed up unannounced and were like, hey, Doug, we're here from the insurance company. We want to inspect your property. What? I'm not available right now. I'm in the middle of this. I just got out of the shower.
She's sleeping.
So, yeah, and it was minimal contact between the carrier and the property owner. And, it was based on, they would go around, can I speak to the tenants that live here? I want to get some information on that. Yeah, so as an owner, all of a sudden I feel like the man showed up and I'm nervous because this doesn't feel right. It just doesn't feel good. This isn't a good relationship, right? And then, things just weren't discussed very well. But that was old loss control. New loss control is, hey, we want to come out and actually meet with the owner. We want to have open communication. So I might say, you're the property owner. We got the property and we're coming up for renewal, or we're writing. It's like, hey, Brent, could you set up a time for us to come out. We would love to meet Doug. We'd like to take a walk around, talk with him, and just take a look at the property. And we want to do that. And let's take a look around and look at your stairs, look at the sidewalks. Let's look at some of the conditions on this. Why? Because we want to make sure that we're preventing things from happening, right? And if we can do it now, it's going to be a lot less inexpensive than having to deal with it later. And nobody's going to be hurt. There's not going to be any personal kind of involvement here. It's just going to be maintenance, or hey, that sidewalk that's sticking up, that's like that's bad. You have some older people that reside here. We don't want them tripping and falling, and along those lines. So hey, let's fix that sidewalk. Yeah, that's great. I mean, and that makes sense, right? And they'll explain the process, and they're really being transparent with the owner. So now, instead of the insurance carrier, this big black cloud over here that I totally ignore and I don't understand, now it's like I'm going to actually meet with somebody and we're going to talk best practices. And so good property managers, good owners, they're going to be like, yeah, okay, I understand that. I don't want people hurt. I don't want my property being damaged. I don't want to lose my property. And they're going to build a relationship where that relationship never existed before. So those are some things that are really, and I have one carrier in particular that's just doing, they're just doing a fabulous job of that. And they're really seeing some ROI on it as well. So it's being proactive, transparent, and relationship building on there.
And mitigate that risk, or preventative maintenance, all of that stuff.
Absolutely. Let's get it out in front. Let's take care of things before they happen, because again, it's going to be a lot less painful and a lot less expensive.
This is really in depth. A lot of information we've covered. As we round out, what I really wanted to ask is a little bit about you.
Sure.
You're obviously, it shows you're someone that's passionate about insurance. I never thought I would say that, but I believe that Brent really is, after sitting here with an hour and listening to him. And it's important. It is very important. It's right up there at the top of the list. Snapp Associates, Brent Walla, what are you guys all about? Where do you operate mostly? You said multiple states. So
sure.
Tell me a little bit about what you do in your practice.
So Snapp Associates been based here in San Diego since 1941.
Wow.
It's been under the current management and ownership since 1991. So it's got a long history of being in San Diego. And we're an independent broker, meaning that we work with multiple insurance companies and represent them. So we don't work for a single insurance company and only have that product there. So where that benefits is, depending on your business, depending on your property, depending on the type of risk with that, we can go out and work with carriers that have a good understanding of your operations. And so what I like to do is really get to know my clients' operations and understand the risk behind those. And so that I can convey that to the carriers and find the best carriers that also understand those risks. So we can pair those up. We've got the best policies for the type of risk associated with that. Because many times people are like, Brent, my insurance carrier just doesn't understand what we do. So it's hard to go, and I ask sometimes, well, do you think the insurance company does? Because the guy that's communicating that, translating that, and a lot of times there's misclassification, and it happens. So understanding that, and I think we want policies that are going to respond if we have claims on that. And then we want a good service team, right, on there. So I think my approach, I've been with Snapp for a number of years, and I didn't grow up in the insurance business, but I made a shift into this business. And I came from an agency background, and I also owned a company too. So most of the times when I meet with my clients, I've sat on that side of the desk. I know you don't want to talk to me, but I like to communicate, like I said, insurance in a language that you can understand, explain why you need it, explain the risk associated with your operations or owning a property and things of that nature, and really to educate them. Because I remember when I owned my company, and when you came to those bumps in the roads, or you came through those processes, and like, hey, I really wasn't told about that. It's extremely frustrating when you don't know, it costs money, and you weren't aware. So I really try to educate people from the side standpoint. And I think that's where the passion comes from. It's not like, I love policy. I love the way they write these forms. It's not that. It's that I've been the owner.
Right.
I've been the bit, and I want to say, hey, let's make this more of a positive experience and I want to work with you to do that and make sure you're properly insured. So that's really where my passion comes from.
And that's one of the reasons why I really wanted to sit down and have this interview with you, because like myself, Brent has been specializing in working with rental owners. And Brent actually and I met at the Southern California Rental Housing Association. Brent's really getting involved. And it's helpful because just like with attorneys, with insurance providers, with real estate people, we all have specialties and we all understand certain lines of business. And as we get more involved with associations like the Southern California Rental Housing Association, Brent's now the chair of the membership committee, so thanks for doing that. The bottom line is get involved. And it shows that you have a commitment to rental owners and understanding. I mean, we just spent an hour talking about the details of what a rental owner could experience and what they should look for in their coverages, what they should look for in the types of policies they get, basic, broad, and special. Their 24 months of loss rent cover. I mean, so clearly you understand the plight of the independent owner or even just the property management company or all the owners of rental properties, and it shows. So thanks for coming on Rental Owner Insight. What we're going to do is put all your contact information down in the description. So unless you want to just say if there's a website or a phone number, the best way to reach you would be?
I mean, we're at snappinsurance.com.
And Brent Walla, thanks for coming on, man.
Thanks, Doug.
This has been a lot of fun.
It's been a lot of fun talking insurance. You know, we don't really hear that too often. So
I'm surprised I'm still awake.
Exactly, right?
All right, thanks everybody. Check out the description, hit the like button, subscribe, all good things. Thank you very much.
Thanks.